Good morning. Buenos dias. My name's Kevin Gray. I'm the deputy editor at LatinFinance. A warm welcome to some of our participants who have probably left the warm summer of the Southern Hemisphere to join us this morning. We're glad to have you with us. Welcome to our panel on Latin America 2020, the Sovereign Outlook. The timing for this discussion probably couldn't be better. January is off to a sizzling start in terms of issuance in the region. I think as of earlier this week, we had seen sovereign and corporate issuance reach more than $36 billion so far in January, which is about a 300% increase from the same period last year. Yesterday, in fact, we even saw two corporates raise nearly $1.5 billion, and two other entities wrap up deal shows. So the discussion of this is the timing is fantastic, quite frankly. We're very fortunate to have officials from two sovereigns who have already been in the market so far in January. An official from another sovereign that was in the market late last year, and perhaps maybe plotting its move again at some point this year. Hopefully we'll find out a little bit more about that this morning. We also have someone who has helped engineer deals in the region, has a vast, deep experience and perspective on Latin American markets. So we should have a good conversation this morning. In our discussion today, we are going to assess the flurry of this activity so far and explore the outlook for sovereign issuance for the rest of the year. I'd like to encourage folks in the audience, please, if you have a question that relates to whatever we're discussing up here, please feel free to just raise your hand. We will take your question. We'd like it to be interactive. We will be taking questions in English and Spanish, responses in English and Spanish, whatever anyone feels comfortable with. Again, we have an excellent group. I'd just briefly like to ask each one to introduce themselves before we get started. Perhaps we could start here on the right with Alexi.
Yeah, Alexi Remesov. I'm with Debt Capital Markets at HSBC.
Hi, José Olivares, Head of Public Treasury of Peru.
Hello, yes, I'm Patricio Sepulveda from Chile. I'm the head of Public Debt Office.
And I am José de Luna, head of the Public Credit Office at the Ministry of Finance of Mexico.
Thank you all for joining us this morning. I just wanted to kick off our discussion with a broad overview, really, of your perceptions of the market. Before we dig deeper into perhaps situations in each of your countries, but I'd like to perhaps start with Jose and Patricio, since both Mexico and Chile have been in the market already. Jose, as I think the minister mentioned, and most of the folks here know, Mexico was in the market for in both the dollar and euro bond markets for more than $3 billion, essentially front-loading your borrowing schedule for this year. Could you tell us a little bit about what factors led Mexico to get in the market now? What were you seeing? I think Minister Herrera had mentioned a cautious approach, cautious thinking around market conditions. Could you tell us a little bit about what you were seeing and what drove Mexico to the market at this time?
Yes, thank you very much. I think for Mexico, external debt is important. It accounts for almost 22% of all our debt. And under the current environment, we saw various conditions that made us take the decision to come to the markets. Number one is that the interest rates are extremely low. Historically speaking, we have the lowest rates that we have ever had in many decades. And that helped us to reduce the cost of our debt. We are in Mexico, we have a debt to GDP ratio of about 44.9%. And it's not a huge stock of debt, but we have to service that debt. And we are always looking for opportunities to reduce the cost. So currently, we have very low interest rates for dollars, for euros, and that gives us an opportunity to refinance some of our stock of debt. Another important factor is that in comparison to 2018, this year we see that there is a stronger demand for our bonds. And also in this year, 2020, we feel that the conditions in Latin America, and particularly in Mexico, are improving. So our economy is expected to grow higher than in 2019. And that makes our country more interesting in terms of capital inflows. So basically, we decided to go to the market in early January. We thought at that time we had very good conditions. First, because early in the year, there were almost nobody was in the market. At least from Latin America, we didn't see any sovereign coming to the market in the week we wanted to come. And number two, when we executed our transaction, we were able to achieve the lowest coupon rates ever for our external debt. The issuances that were mentioned by our minister in dollar and in euros were oversubscribed by more than 5 times, especially our long-term bonds. So that means that there is a huge demand for our bonds, and we were pleased to see that we were able to reduce the cost of our debt. I think for this year, we generally see that the market conditions provide a good opportunity for sovereigns as well as for corporates to come to the market and to either get new financing or refinance existing debt. In our case, we came to the market more to refinance existing debt, and I think that will give us the opportunity to reduce its costs. So these were the major factors driving our decision. Thank you.
Patricio, Chile, 2 green bond issuances, more than $3 billion, coming several months after a complicated period in Chile and perhaps some change in the economic outlook for the country. Why now? The rate environment, was that what drove Chile's decision to come back with the green bond issuances? Could you give us some color around what your thinking was in terms of timing for these?
Yes, Kevin. So I would like to start first to divide the decision regarding the green issuances versus the economic situation of Chile. So you're right. After October of last year, Chile changed. So we effectively, at that time, estimate an economic activity growth for this year about 2.3% or more, and then thereafter to increase to have about 3% of economic activity growth. Because we experienced this shock, the shock of confidence, the economic growth last year we estimate will be about 1%. So this is a very important shock. And also for this year, we are expecting to have a growth for about 1.3%. So in October and November last year, the proxy of monthly activity was about negative 3.4%. So the situation of Chile is very different. What we did in the government is twofold of 2 dimensions. The first one was to to try to minimize the impact in the employment, to try also to boost the investment, especially the public investment. So, and also to continue to boost or to continue that the SME, the small and medium enterprise, will access to the credit channel in our economy. All of this means that we implement a very important fiscal stimulus package for about 2% of GDP this year. So this is the situation regarding the impact of the violence and vandalism that we experienced last year. But currently, my perception and the perception that we have in the government that they are effectively reduced. If you look the violence in the peak of October, it was about 350 events during 1 week across all the region of Chile. Right now, we have, since December, we have only 2 or 3 events. And also because we began an important agreement with all the political spectrum in order to move forward with the constitutional process. We also obtained an agreement regarding the tax reform in order to increase the revenue of the government, and also a very important broad agreement in order that effectively in the near future, we would like to increase the revenue in order to increase also the expenditure. So first one is the pensions. So we know that in Chile, and I suppose that in other countries, we have a problem with the pension systems. So we would like to move forward to increase the revenue to finance this additional new demand from the citizens. The health system in Chile effectively is not efficient. We would like to increase the public expenditure in order to increase the quality of the health system in Chile. So this is more related to the economic activity and the public finance. The second field regarding the green dimension is that when we began the process, it was in 2018, because the government of Chile would like to effectively incorporate as a very important objective of the government the environmental protection and also the climate change action. So we began the process in June of 2018. We built effectively the green bond framework. It was a very long process. We began the advisory with the IDB. We also work together with CBI. And it was a process that we take at least about 1 year to draft the coordination between different ministry, agriculture, environment, energy, public works, etc. So it was not a decision that we take when we decide to go to access to the market. So it was a very strategic decision that we take in 2018. And then when we obtain all the approval regarding the second party opinion, also with certification from CBI, we access to the market in 2018. Our experience was very, very successful in our point of view. The demand was effectively higher than we have historically for Chile. We increased the investor base. We obtained a historical rate last year. We also repeat the experience this year in this month. The decision to access the market was taken not because we experienced the event in October. It was taken before that when we sent to the Congress that the budget bill was in September. The planification was to issue about 9 billion and to issue about 30% in foreign currency. And the decision was also that all these 3.3 billion that we issue last week will be with the green label. We are working for the last 3 months in order to collect the information to have the pool of projects related to this issuance of bonds. and we execute this transaction last week. We consider that again we obtained a very successful result, and we think that for Chile it's important to continue to issue this green or this class of assets. We have been the first country in America to issue this kind of bonds. We would like that our colleague from the other country, like Peru or Mexico, I will invite that they will also begin this kind of issuance. That's it.
And I'd like to come back to green bonds later in the panel. Perhaps we'll find out a little bit more about what your colleagues are planning to do. Jose, Peru was in the market late last year with fantastic results. Are you a little jealous that perhaps you didn't wait until now? What, in terms of timing and how you're viewing the market, what are you seeing and what you're thinking there?
Thanks for the question. Well, the market today, we can see better than the last year. It's a good moment, I think, for the reasons that my colleagues said moments ago. For the Republic of Peru, it's a complex decision now in this moment. Why? Because of what you know, during the last years we were very successful in our main objective, our main target was increase the portion of soles, of local currency, in our total debt portfolio. And we were very successful with that target. More than 10 years ago, the portion of local currency was only 5% of total debt portfolio, and now is 66% of total debt portfolio. We were doing a lot of liability management exercise, solarization process, diversification of non-resident investors with local currency. But now, in this moment, we are doing some changes. Well, we did some changes in the legal framework of our assets and liability management strategy. Recently, 1.5 months ago, we published a new law to apply the fungibility principle in our asset side of our balance sheet. So in that way, we have more cash resources of our asset side, and in that way, we don't have many financing needs. So in the extreme case, for example, if we can minimize totally the cost of our debt, we have a space for this and the next year with these resources. We know that we need some presence in the market too, but for example, we are expecting that for this year, our debt issues will be less than other years, and basically there will be liability management exercises by backing global or soberanos bonds in dollars, in euros, in soles, to minimize the refinancing risk, to generate positive NPVs, savings, to optimize the debt profile, but not focus in new cash. We are going to continue focus, obviously, in local currency, but hard currency is a possibility too. During the last months, we were evaluating other bond structures, for example, green bonds, sustainable bonds, social bonds, but we have now this trade-off that I am explaining about this fungibility principle of our asset side. That is a good problem, a problem for investors, obviously, For us, it's a good news. We were talking of these changes with rating agencies, with economists, and they are agree that we can to improve that asset management strategy because of, as you know, we were very active in debt management. Now we have a more liquid local debt capital market. No? In 2015, the total outstanding of Soberanos bonds was only 44 billion soles, 44,000 billion soles. Now, the total outstanding is almost 120 billion soles. So in that way, we have a more liquid capital market. The volume in the secondary market 5 years ago was only 100 million soles per day. Now is almost 800, 900 million soles per day. So in that way, Republic of Peru has a great pillar that is strong macroeconomic fundamentals during the last 20, 25 years. But now we have, in addition, a new pillar that is a more liquid, a strong public debt capital market in local currency. So in that, and returning to your question, I think it's a decision that we are evaluating in our internal committee with minister, with vice minister, because of, as I mentioned before, we are doing these recent changes in our legal framework. But as I mentioned before, it's a good problem for us too.
Thanks, Jose. And we're going to come back with some additional questions about some of the things you just mentioned as well. Alexei, what are you seeing from your perspective in terms of market dynamics and what the implications are, at least in the short term, for issuance?
Yeah, just putting things into context, obviously the sovereign debt issuance now is about a quarter of the total out of Latin America. So clearly not as important as it used to be 10, 15 years ago, but it's important insofar as it is a big driver, important driver and reference point for the private sector accessing capital markets. I would say in terms of market backdrop, I would split it into two important layers. One of them, of course, is more structural, macro factors that are driving the market to be so bullish and buoyant. And of course, there are some idiosyncratic factors that may become more apparent down the road. When it comes to the sort of more structural factors, of course, the major driver here is a significant monetary expansion that has been engineered by the central banks, and he has been boosted recently by the U.S. Fed, which had expanded its balance sheet because of the repo crisis. So clearly, the market has seen, even though the formal QE is no longer in place, but this additional liquidity expansion definitely gave a bit more boost to the overall demand for assets, not only for emerging markets, but across the board. You can obviously see, asset price dynamics are quite buoyant across the board. Now, with that in mind, obviously, we've seen very flat yield curves, both in euros and dollars, and I think the issuers here in Mexico and Chile took advantage of that, not only by raising new funding, but I think in general, the borrowers have been terming out some of the existing liabilities at this highly competitive interest rates. It's a very prudent exercise on the part of the borrowers. I mean, Peru obviously did its homework in terms of de-dollarization. I mean, moving the debt more away from dollars to soles. I think it's important for Peru to reduce the the dollar liabilities because of the past. So it's creating more monetary control for the country to bolster its own currency. But in any event, so these are very important factors that have, I think, also not only in terms of issuance dynamics and the cost of borrowing, but also providing more buffer in terms of financing needs going forward. Because I think terming out liabilities reduces your financing needs for the next few years for the sovereigns that have done those exercises, and of course overall improves the liquidity profile. Where do we see market going forward? As of now, if you stand here, and we did some transactions yesterday in spite of some of the headlines with the virus, the market continues to be very robust. We executed transactions yesterday, a big corporate transaction out of Chile at very competitive rates, and definitely sentiment in the fixed income market remain robust. But there are definitely always some risks that we need to look out for. Clearly, the overall growth outlook is always at risk. I mean, there are always tail risk factors like the virus, for instance. They're hard to predict, but they could happen. And of course, it's for us yet. We're yet to gauge what the impact on global growth is. But given where the asset prices are, valuations are pretty hefty. Obviously, any meaningful blip for global growth could impact, obviously, adversely investor sentiment. Obviously, the U.S. election cycle is another important factor. I think the market is watching. There's no crystal ball as to how far it may affect sentiment, but clearly potential source of volatility. I think in the financial markets, investors are have a pretty benign view about benchmark rates. Europe obviously is adjusting its inflation targeting regime, but I don't think there is any concern about European monetary policy getting tighter. And I think the U.S. Fed is pretty much staying put on rates at this point in time. But I think what market is looking is more technical consideration in terms of U.S. Treasury financing needs. As you know, U.S. is running about $1 trillion deficit, and they announced, the U.S. Treasury officially announced its plan to use 20-year maturity as a funding vehicle for its financing. So clearly indicating that there will be a significant amount of supply. We obviously don't know how much supply there will be in the 20-year tenor, but clearly there will be greater weight to financing in the longer part of the U.S. Treasury curve. Again, the market is debating how it may affect the 10-year Treasury pricing and 30. I think the expectation both are likely to be driven wider. As a result, if there is a significant amount of financing placed in that tenor, you could potentially see steepening of the U.S. Treasury curve, and it may, make some of the liability management exercises that the government have been undertaking somewhat less attractive. But again, there are a lot of other factors involved, but I think it's something that we need to look at. Anyway, it's very hard to predict what could be the sources of potential volatility or risk aversion. There are obviously reasons to believe there may be some over the course of this year, and that's why idiosyncratic country-specific factors could become important when there are sources of volatility. And I think, some of the examples here at this panel, Mexico has gone through a very important political transition. And why? Because the new administration took a very important step in the fiscal policy side. The primary surplus, was an important messaging to the market that this government is very serious to keep the fiscal accounts in order for Mexico. And I think it gave a lot of confidence to investors in the overall Mexico story, in spite of the challenges and, of course, a lot of doubts when the government was taking place. So I think it allowed, the government to access market at record low rates. And I think going forward, if there is stress in the market, I think this policy framework should keep investor confidence in the sovereign as a result. And Chile and Peru, they've had history of very prudent fiscal policy, I think, and then that's why some of the stress points in Chile didn't create any disruption in terms of investor sentiment vis-a-vis the sovereign. And Peru also has gone through a lot of political changes, and very significant ones over the last year. And again, the success it has had in accessing the market, notwithstanding this pressure points, is relying upon a very prudent track record of fiscal policy. So needless to say, just the conclusion is, yes, this bull market can mask a lot of imperfections, and investors are hunting for yield. But I think when the stress comes, in the end, investor community will look at the structural factors in each of the economies.
Thank you, Alexei. Alexei mentioned the virus, U.S. election as potential factors, threats to the market and sentiment. I just was curious, a question for anyone here, are there any other factors that you are looking at in terms of that you could see as potential risk to significant shifts in sentiment that you're really tuning into, Jose or Patricio, or Jose?
Well, actually, if we focus only on the factors that could change the current scenario, I think we have a long list of factors. I mean, certainly one is the issue related to trade uncertainty. I mean, the trade tensions that we had last year, somehow they have receded, but I think we are not over. I mean, we are all waiting for phase 2 of the U.S.-China negotiations. Another factor is obviously the geopolitical tensions in the Middle East. I mean, in Iran and with the U.S., we hope that will not escalate further. Then we have the new coronavirus, which we still don't know what will happen. And then we have the U.S. elections coming in the second half of the year. So we have a lot of factors, actually, that could certainly influence or change the current scenario. But from our side, I mean, we will be monitoring the market conditions and see if there are opportunities to do perhaps some liability management exercises that are debt neutral. But I mean, at the current time, conditions are good, but also volatility can happen again.
Jose, you mentioned the possibility of liability management exercises. Clearly, when you look at the Mexico issuance in the dollar market, lowest coupon ever, right? I think for Mexico. Does that mean should we be looking for Mexico to come back to the dollar market, or perhaps explore other external markets here in the coming months?
The possibility is always there, so we will see the market conditions.
Patricio, coming back to you and just drilling down a little bit deeper into the Chile outlook. Again, I think you've touched a little bit on some of the challenges in Chile, how the ministry has responded. And I just wanted to see if you could give us more of your perspective in terms of the evolution of the thinking around local markets, external markets for Chile, sort of as a result of what's happened and kind of a shift in terms of funding strategy priorities as a result of some of the things we've seen in Chile over the last few months.
No. Yes. So for Chile, it's an ongoing process. So we address different demand of citizens through a very medium-term measure. Also, all the fiscal stimulus package in order to boost the economy for this year. In order, because if we would like to address the demand, we need to have more revenue. So with a very low level of the economic activity, will not have the capacity to finance the future expenditure. So in terms of the funding plan, so in Chile, we for at least the last 5 years, we try to have a very important objective to maintain an currency composition for a local currency for about 80% and 20% in foreign currency. It was a very important change because 20 years ago it was the opposite. So the only 4% was in local currency. So we have migrated to the current composition. We'll try to maintain this currency composition. Additional to this, since 2014, we decided to diversify our external debt. We included the euro because we would like to have a diversification of our investor base. It was a very, very good decision because, for example, this year we accessed the markets, and the amount that we finally reached was about 3.3 billion. So for Chile, it was an important size. So we consider that to have the possibility to access in the US market, in the Euro market, was effectively a very good decision for Chile. And what we did also last year, as I mentioned early, is to diversify our investor base through the issuance of these green bonds. Was also a decision that we take not only for the credential of Chile in order to environmental protection, but also because we like to diversify our investor base. The additional thing, I think that's similar that Jose from Peru mentioned, is effectively we have a very important buffer in Chile. So we have the capacity to finance our needs, for the government needs, not only to access to the market, but also to use the fund that we have. We have the sovereign wealth funds. We have the availability of treasury asset for an important amount. So we have we are forecasting for the coming year to use the issuance of debt as a tools for finance the government needs, but also to use the funds that we still have for the moment for about the total amount is about 20 billion. So it's still an important buffer that we have currently, and we would like to have this buffer together with the debt policy in order to finance our needs.
Jose, you had mentioned the emphasis on liability management in your approach to the global debt markets this year. What else could you tell us a little bit more about your thinking around that, and what can we expect from Peru? Excuse me, sort of going forward.
Yeah. Well, for this year, I would like to say that for this year, our financing needs, in parentheses, will be all around 18 billion soles. It's equivalent $5.5 billion. We pre-finance $1.5 billion the last year. So it's as Patricio mentioned some moments ago, the changes that we are going in the asset size of our balance sheet, it's for our ordinary resources, not fiscal stabilization funds. Not include fiscal stabilization funds, sovereign wealth funds. We have a buffer around $5.4 billion equivalent in dollars. That is the savings of the last commodity super cycle of Peruvian economy. But we are not using that resources this year. We did changes for ordinary resources. In Peru, it's called Cuenta Única del Tesoro, that is like unique treasury account. No? Ordinary resources, determinative resources, and tax resources, tax collection resources, etc. So we are going to be more efficiency with that management, not only to minimize the debt pressures, maybe with the profitability of that resources too, in many kind of instruments. But returning to the debt side, we need the composition of these 18 billion soles is 14 billion soles through bonds, external or internal, and 4 billion soles through multilateral credits. Maybe we are going to need to issue less than we expected for this year. Our debt GDP ratio the last year was 26.7%. The official number for this year is 26.5% in the multi-annual macroeconomic framework, but we are expecting a number below that 26%. You know, we have fiscal rules, and one of these is the debt GDP ratio below 30% of GDP. we have a very fiscal discipline in this sense. And our fiscal deficit, recently we changed not the fiscal deficit rule, we changed the convergence route of our target, that is 1% of GDP. The idea for this year is to have a fiscal deficit around 2% of GDP. For the next year, 1.8. For 2022, 1.6. And for 23, 1.3. In 24, we are going to get the level of 1%. It's very important because during the last years, during the last 2-3 years, we were below our fiscal deficit projected. Why? Because of a lower subnational government's execution on projects. No? And as Kevin mentioned before, now we are going to continue basically doing liability management exercise, but we were very active during the last years, and each year is more difficult to get to buy back our global bonds, that they are very expensive in dollars and in euros, and our soberanos bonds now. I would like to say that maybe we would like to improve the short term of our local curve, no? That it's very liquid. The liquidity of our curve is basically the mid and long term. It's a possibility to do maybe something euros for euros, yeah, in the midterm, but with that objective, basically refinancing risk. If the possibility to do local currency for euros is there, obviously we are going to local, no, to go to local. But it depends on market conditions.
Very interesting. I wanted to, in the interest of time, shift our conversation a little bit to ESG, green bond issuance. Some of the green issues have come up already in the panel. Again, just a reminder too, for those of you in the audience, if you do have any questions, please just raise your hand and we'll be happy to take them. Alexi, just very quickly, on your impressions on investor appetite for green bonds from the region, what you're seeing, your perspective there.
Yeah, well, what's important to say is the trend. The trend is definitely on the upswing for green product, green and sustainable product. And I would say if you look in perspective, some years back, so the bulk of the demand for sustainable products, product offering, asset offerings, was coming from Europe. Europe was sort of the center of demand and interest in the product. Right now, if you look, I mean, the mainstream U.S. fund managers like BlackRock, the recent announcement from the head of BlackRock is to set up a specific fund for green financing and actually provide apply criteria for all of the investments that would include a green framework. I mean, this is game changing. So clearly, you're seeing, the world's largest fund managers, I mean, which mainly in the U.S., actually taking the stance, and clearly that's an indication that structurally demand for this product is on a significant upswing. When it comes to the benefit for the issuers, obviously there's a messaging benefit. I think there's definitely an important a policy statement for a sovereign to do a green or sustainable bond. But in terms of investor diversification, there's definitely a benefit. I mean, there are a lot of accounts that have certain obligations to invest certain amount of their portfolios in green products. So it's almost like a captive demand. I mean, they're looking for these assets. They have to meet certain minimum requirements in their overall portfolio to have sustainable instruments. So clearly, there is There is diversification of investor base. I think it was mentioned. Chile clearly saw this in their offerings. When it comes to any monetary impact, it's very hard to quantify. Whether there is because of some of this captive demand, you actually extract benefit in terms of financing costs. But we've seen in some of the issues that we had executed, there were certain large investors that put orders in the order book that were specifically there because of the offering was green. And those investors probably otherwise would have had a small ticket, or they wouldn't be there at all. And in some situations, we could see that there was some pricing benefit because of some of this captive demand. So while it's very hard to quantify, put specific number, we definitely see even some pricing benefit for issuers who offer these products to the market.
Patricio, you had the two inaugural green bond issuances last year. Back again this year, what can we expect to see next in terms of green financing from Chile?
Yes, in terms of next issuance green, so effectively the green project that we have is not infinite. So effectively when we began the process, we collect information for about 30 billion of green project. For last year, we identified 4.4 billion US dollar in different sector, green, clean transportation, etc., renewable energy, and also the other one is green buildings. This year we collect information additional project for about 4.3 billion, specifically in the clean transportation, so new metro line, railroad in all the country. I think that for next year it will be difficult to have additional green projects that will have all the certification, because remember that we have to deliver the allocation report, so we have to have the capacity to deliver all the audition or all the reports regarding the expenditure of all those projects, and also the impact report. Also, we will have able to deliver this report. So next year, I think that will be difficult to issue again green bonds, but we are looking to see the social bonds. It could be also an alternative especially for the government, especially with the situation that we have currently, that the government Chile have to increase the social agenda, and we will also increase the expenditure because we have all this demand from the citizen in terms of social concern.
This would be, a social bond, perhaps explore it for 2021.
That's correct, yeah. Yes. For this year, I think that we already issued the green bonds, and locally we will issue the local currency bonds. So maybe next year we will plan to explore the possibility of social bonds. Could be in foreign currency, but also could be in local currency. So this is something that we are in the process of assessment.
Jose, there's been market talk that Mexico has started sort of preliminary looking examination of the green bond option. Can we expect to see something this year in the green bond space from Mexico? What is your thinking around issuing in green bonds?
Yes. Well, this is certainly something very, very important for us, because it's not just the international investors who are asking for new types of assets, for green bonds, social bonds. Also, our local investors are asking for it. Our pension funds, insurance companies, most of our fund managers, We go into meetings with them, conferences, and one of the first things they ask is, where are the green bonds? Where are the social bonds? And clearly there is a large demand for this type of assets. And currently the government is working on it, on the framework, on the conditions to make it happen. I think it's just a matter of time and a matter of finding the right market conditions, but we are clearly working on it. Now, some of our public sector entities, such as our own national development banks, have already issued green bonds. So there is already some experience. Nothing has been done yet at the sovereign level, but this is something we are working on. And finally, I think it's important to say that we are doing this not only because there is a growing demand for this type of assets, but also we see the benefits of it. I mean, when you have a green bond, when you have a social bond, the framework around it makes you, as an issuer, creates the obligation to report how the proceeds are being used. So this is something very positive for us because we know the investors care about how their money is being spent. And certainly, this is something we want to report. We want to show how money is being spent. And currently, we have a lot of green projects that are not certified as such, but they are actually very large green projects. It's just that nobody has certified them, so they don't appear to be green assets. But this is precisely the work we are doing. We are looking at our investments, especially those where public money is involved, trying to distinguish which ones are purely green. Also, we have an important social agenda in Mexico. We have new social programs. So there is a lot of material to build new types of assets, and we are working currently on it.
You mentioned that you're working on it. Would the thinking be with an objective of perhaps issuing this year? Would you say that would be a priority or perhaps an objective for Mexico?
Well, it's a combination of factors. I mean, if the market conditions are there and if we are ready, then why not? But we cannot set a specific date for it.
Do you feel like you're pretty far along in the process in terms of, you talked about the framework and working on that. Do you feel like you're towards the end of that process?
We are still in the process.
Okay, great. Jose, what you mentioned it earlier today, Peru exploring the idea of possible sustainable bond, green bonds. When we spoke a few weeks ago, you had also mentioned this, that Peru would be looking to add an ESG element to to its funding strategy this year. Have you decided which route you'd like to go? Green bonds, social bond. What's your thinking there? Are you leaning heavily in one area? Have you reached in the decision-making process sort of any decisions yet?
We are very interested in green bond, social bond, or sustainable bond since the last 2 years. But as I mentioned before, now we are in a process for this new assets and liability management strategy in the Ministry of Finance. And obviously, we know about all the benefits of green bonds, of social bonds, and sustainable bonds, but we have this trade-off with the more efficient use of our asset-side resources. So we like green bonds, but on the other hand, it's in this moment it's difficult to know if we are going to the markets this year for this type of instruments, because of having to issue green bonds for having green bonds not necessarily is efficient. No, in our case, we need to minimize the impact in fiscal deficit, in the debt GDP ratio, and if we have the resources available in our asset side, we need to gain more efficiencies in that management. So now we are evaluating the debt management, the assets and liability management strategy to decide if we are going to the green market this year or the next year. Yeah.
I remember when we spoke as well, you had talked about all the Chile's green bond issuances have been in euros and dollars. You had made reference to local currency, some trying to explore a way to combine the green element with the local currency element if there was an appetite there. Have you had any feedback?
Yeah, the demand is there. The demand is there for green bonds of Republic of Peru in local currency. No? During the last roadshow in November last year, we were talking with many investors, and they said us that they were very interested in a green bond in local currency. So it's in the same line of our debt strategy, that is continue increasing the portion of soles in our total debt portfolio. And I can say that, for example, now we have 66% of total of local currency in our total debt portfolio, but our target in the midterm to get a level around 80 or 85% of total debt of local currency in our total debt portfolio. It's in the same line, but I repeat, no, we are evaluating now the assets and liability, the new assets and liability management framework.
Sure. Again, I just wanted to give folks in the audience an opportunity to ask any questions. If anyone had a question, yes.
I do have a question, although it's not directly ESG related.
Sure, sure.
And it's for Patricio about the, you mentioned you have roughly 20 billion in combined sovereign wealth funds and treasury assets. And I see that the data for the 2 different sovereign wealth funds is published as of November. But I'm wondering if you can give me a breakdown as of now between the 3, the stabilization fund, the pension reserve fund, and treasury asset balances.
Yes. So effectively, and as in December, we use a part of this economic and social stabilization fund for about 1.5 billion. And we are planning to use 3 billion of this fund during this year. So roughly, this fund will have a size at the end of this year for about 7 billion of US dollar. The other one is the pension reserve funds. So the current size of this fund is about 10 billion. And the proposal of the government is to finance the pension system reform that we sent to the Congress last week, is to use part of this fund. And the way that we will do that, or at least is the proposal of the government, is to lend this fund to the Solidarity Fund that will finance a portion of the new pension system that we will have in Chile. Additional to this fund, I don't know if you know the story of Chile, but historically we have in Chile, in Spanish, is the Fondo Reservado. This is basically a fund that comes from and was managed by the military institution. So since 2020, we opened up this fund, and this fund is about 5 billion of US dollar. Okay, so this fund was transferred to the treasury assets at the beginning of this year, and we will use about 5 billion of this fund to finance the needs for this year. So this is the reason that we are using the funds mix between the Economic and Social Stabilization Fund. The other portion will finance the new pension system of Chile, and the other assets will come from the military fund, former military fund, now is managed by the Ministry of Finance. if you calculate all the need for this year, it was about 16.6 billion of US dollar. 9 billion will come from issuance of debts. So we already issued 3.3 billion, and the rest will be issued in local currency. And 7.6 billion will come from the assets. 3 billion will come from the Economic Social Stabilization Fund, and 4.6 billion will come from the treasury asset. And remember that portion of this will come from this former military fund. Okay, so in the future we are planning to use a portion of the funds, but we are planning also to access to the market. In line also we will reduce, or we will converge our structural balance to reach 1% in 2024. And also we will reduce our, over time, we will reduce our financing needs. Okay?
Please.
On the same matter for Patricio. So what you're saying is you're basically sitting in 11, 10 billion of dollar cash, right? According to the issuance you already did, and the money you're going to use from the sovereign wealth fund. So my question is there any plan, or you can elaborate in what's going to be the strategy to do that financing throughout the year? Is there any seasonality that will warrant to front load those dollars at some point, and potentially considering some kind of monthly auction like other countries have done to anticipate what's going to be the flow of those dollars? Like how are you planning to spend that?
Exactly. So as the minister Briones mentioned, so we are planning to sell dollar during this year for about 10 to 11 billion of US dollar in peso, because you know that our expenditure is mainly in peso, not in US dollar. So we are currently in the process to study which will be the mechanism. So we are in our office more interesting to be more transparent, so to have a calendar similar that the central bank operate, for example, with the intervention that they began in December. But it's still in discussion in the government. My perception or my recommendation is to have a calendar, as I mentioned, maybe not to give all the calendar for all the year, but at least for the next quarterly, we will sell about 3 billion, and we will give information on a weekly basis to be. My perception and conceptually, we like to minimize the impact in the market, FX markets. I think that theoretically is better in order to minimize the impact in the market to be transparent. This is the concept, and I think that we will have a final decision during the next month in March. I think that we will establish what will be the mechanism.
Any additional questions? Okay, I wanted to give the final word to Lexi. Given your perspective on Latin American markets and oh, I'm sorry. Did you have a question?
Yeah, sure.
Okay, sure.
So this question is more about market infrastructure, and it's really a question that applies more to the Argentinas and Venezuelas, but it's important for countries like yours to have a leadership role in this area. So that's why I'm asking the question. So there are a couple of initiatives that I think could kind of make a difference to the market, and wanted to get each of your perspective on these. One is the Institute of International Finance's Debt Transparency Principles, which require, which is a framework for transparency of private debt that sovereigns take on. Have you considered? Are you considering adopting these principles? And the second is a creditor engagement clause, which would require, in the event of a default, sovereigns to at least talk to creditors, not necessarily come to any decision or conclusion, but at least to engage in a conversation. So these two initiatives I wanted to get your opinions on. And because leadership from countries like you will help countries that require this more to adopt it. Thank you.
So does anyone want to take that question? Sure. Jose?
Sure. The case of Mexico, we are looking at those proposals. We don't have an answer yet, and I think it's more for our lawyers to look at them, see the implications, and then come up with some proposals. But at this time, we don't have yet an answer.
In the case of Peru, it's a good proposal too. We can evaluate the proposals, but only to say that the last year we published the infrastructure plan for economic growth. It's a public document in the website of Ministry of Finance, and the competitiveness plan to economic growth too. It's public information.
Great. Alexi, the last word. Again, just drawing on your deep experience in the Latin American markets and big picture. We talked a little bit about January off to a record start. We've heard a little bit from Mexico, Chile, Peru on their plans. You touched on some of the risks to the current investor market sentiment. From here on out, what's your thinking and expectation, sort of, at least in the short term, in terms of markets and what we might see?
Yeah, I think the reason the January has been so record because I think a lot of the sovereigns and some corporates have pre-funded themselves, expecting potentially more volatility. So I think it sort of puts a lot of issuers in a comfortable position. I don't think anyone at this panel has an immense pressure to come to the market this year. I mean, unless it's something qualitative. So I think a lot of homework actually, was done in January. Some has been. Of course, we still have the months going on. But I think, all in all, we don't see major financing bottlenecks in the corporate or sovereign sector. I mean, there are some corporates would need to do some funding, but no major refinancing needs that we have to worry about over the course of the year. I think a lot of issuers, borrowers, both sovereigns and corporates, had done their homework over the course of last few years, including this January, and they basically fixed their liquidity positions to the point that the pressure points are very minimal. But I think what the bottom line is, borrowers will come to the market, but more for qualitative reasons, to term out, pre-finance, but not under pressure.
Alexi, Jose, Patricio, Jose, thank you very much for a very interesting conversation.